Check 1, 2. Looks like we're live. Okay. Check 1, 2. What do I gotta do here? I definitely don't feel well. Still. Check 1, 2. Whoa. What's going on out there? Jared, how are you? Good to see you. Yeah, I'm trying to make my way out of this. Hold on here. This does matter, and especially if you're a young trader. If you're a young trader, then this is for you. This isn't every time, but you need to know about this. When I had a conversation with someone, I think it was Sam. Like, I don't know if it was Sam. It could have been somebody else, but we had a conversation about. I gotta set up everything here. So we're talking about being a young trader and being oblivious to basic shit, like just simple things. And I'm going to show you this one right here. This is a fairly we're going to simplify this, though. So we're going to start with this right here. It's fairly simple here. Previous high. Let me just turn that shit off. So this is a fairly simple concept. It's classic traditional charting, but it's still worthy to look at. Get a previous high right here. It's today, right? You're always looking for, you'll hear this called cup and handle and stuff, but truly no. What you're really looking for here is this previous high. Time frame doesn't matter. So this is a 1 minute chart. This previous high right here. You're looking to see if that fails there. It's previous high. Failure to get a new high, right? This would be a failure to get a new high. And this shows weakness for bulls. You can do the same thing in the reverse too. This works for bears as well. Now, if you get the new high, so if you don't have any of this yet here, okay? And none of this is here yet. Okay, just pretend none of this is here. Scratch all that out there. What's important here is it's a 1 minute chart, right? So without seeing any of this shit over here, this is basic stuff, right? Get the previous high right here. You're looking to see if there's a failure to get this high. This is showing the will of buyers waning, right? Not good, right? You want to see a new high. If you're a bull, you want to see a new high. So if you get the new high right here, you don't want to short that. That's strength, okay? Now it can go against you still. We can still roll down and down this way. But when you see the previous high get knocked out on a 1 minute chart, this is a 1 minute chart, right? It's showing strength. Now it can still pull back, but you're going to expect an actual new high over here. Does that make sense? Previous high, you catch the new high. Even if you get a pullback, the expectation is that you're going to go higher. And so the thumbnail this morning is about how to spot weakness or just a pullback or strength, right? How do you spot it? And we can simplify this even more. So I'm going to go to See if I can go over here to this Weeble chart here, and maybe we can bring up SPX or something. Hold on. So, these are fairly simple concepts, right? So here's SPX here. Now this is a 30-minute chart, right? Not a 1-minute chart, but you can see here you got the new high, right? And even on a 30-minute chart, you see the failure to go back up and you get the previous high right here. Pretty simple stuff, right? Failure to get the new high right here. What does that mean? It means if you get the failure to get the new high, that we keep rolling down. Now, a lot of you out there will try to say things like, well, you should have known we were going all the way down here. You'll see Elliott waivers will say things like, oh, if this, then that, then if this, then that. And it's not really good enough, right? It'll go against you. So you'll see things like an Elliott waiver tell you, well, we're going all the way down here. And then, what ends up happening is we get the new high. Then we just continue on to the right, and you say, well, fuck, I hate that Elliott waiver, right? I don't like that Elliott waiver. He got it wrong. The truth is that, like that Elliott waivers need to break out their erasers and stuff like that. You need to know more than that as a trader, as an investor and as a trader. So if you do see that failure, you're going to expect more downside to come. You see the failure again, more downside to come, right? Now, if we had gotten this previous high, or if this had become a previous, it actually gone up here, got the new high, you'd actually expect a reversal to the upside. So it's important for you. The key point here is that no matter who's out there telling you where we're going, you need to be able to identify if a reversal is shaping up or not. Okay, that's the key point here. You don't really care where we're going. You don't really care if we're going to reverse, if we're going to go up or down, right? So price action is king, and not only is price action king, but if we're going to continue down, we continue down. If we end up going up and it goes against your thesis, you follow that all the way up, right? So it's important for you as an investor and a trader not to pay attention to, hey, this is 4,600 and we're only pulling back here, or we're only even pulling back here. We could go lower, right? And it doesn't matter if you only called this, or if you only called this, or you only called this. If we keep going down, you have to be able to chase that, or be aware of that. We're going to continue to go down. If we're going to reverse to the upside here, or even here, you need to be able to identify when that reversal is happening, so you're not on the wrong side of the trade, right? So it doesn't matter what you're calling from here. Like, let's say you're like, hey, I'm calling, I don't know, 3,600. Calling for 3,600. But if it reverses here, you can at least say, hey, I'm calling for 3,600. And we start the reversal process over here. And you're not sitting here going, yeah, it's still 3,600. Does that make sense? If there's a reversal. Same thing for continuation of the downside and that kind of stuff. So we know kind of what to look for, right? And we're coming into this previous high right here, right? So right now we're coming into that previous high. Right now, right? You can see it right here. You can see there's a previous high right here. Now there's some rules here. So we were just looking at a previous high on a 1-minute chart. Now we're on a 30-minute chart, right? So just inside of here, if you're a seller or a bear, what do you want to see, right? You want to see a failure up here, right? Matter of fact, this red could be brought down to right here. So there's a couple mechanics here. If you're a bull, let's start with the bulls. If you're a bull, all you want to see is the touch of a new high. You just want to see the touch. You don't need to go any higher. You just need to see the poke the head out, and you're good to go as a bull. You can actually have a pullback here, but as long as you stay on trend, you're good to go too. As long as you get that new high over here, okay? As long as you stay on trend up here. Does that make sense? Now you're going to hear sellers out there on social media. You'll hear them in the news and all that kind of stuff. And they're going to say things to you like, well, all I really want is the pullback down here, right? Just close all this stuff up and we'll get back to what you want to do up here. That's not real. That's a seller that wants to see the failure to get this new high, because he knows that whatever this pullback is likely going even lower. Does that make sense? Now, if you're a buyer and you get that new high, you're actually triggered to start to look for a dip to buy to go higher. Now, if you failed here and start closing this gap, you're good, still on trend. But if you start to break down here without catching that previous high, you're actually not trying to buy that dip there. You're actually going to be very scared and careful. And you'll likely see this stuff down here get closed, believe it or not, at minimum. And more than likely, more bearishness. So try to parse what you're hearing people say publicly. When you're on social media, you hear people say, why can't we just go back and close this stuff down here? They're not saying that. They're not saying that because they want to close this stuff. They're saying that because they want to see the failure here so that we can get back down here and they're not getting torched, right? Does that make sense to you? This is a half-hour time frame, right? And we're going to switch back over here to this trigger screen. It's a 1-minute time frame. Similar kind of stuff, right? You want to see the previous high get taken out, right? So we can smash up higher here. Does that make sense? Now, even if we fail, you're still going to expect that new high or that next previous high that we have to take out. So let's go back to this other chart over here. And why is this important, right? For the long term, why is this important? So if we get up here on trend, any pullback should be bought, right? Any pullback should actually be bought with strength to the upside. So this is kind of a key place, right? You want to see this hold, or at least this hold in a Monday or something like that, so you can stay on trend and break this previous high. Why is that important? It's because once you knock out this previous high right here, you have your pullback, close out some of your crap down in here, right? You're then going to be targeting your next previous high up here, and so on and so forth, going back and taking out these previous highs. Now, let's say we do all this, so we get the new high over here, right? Yeah, we come back down, close some of this crap out. We start heading back up here, and we actually fail this one. Just fail to get that previous high right here. That's not good either. Can lead to some consolidation and stuff like that. So as long as the bulls are making new highs on these previous highs, their run is intact and should be considered intact unless trend gets broken. You're going to break down over here some, that's fine. But until that happens, if you're able to get back there and make those new previous highs, the bull run is intact. Okay, so into this weekend, right, the end of today and into the beginning of next week, if you're a bull, you don't want to see trend get broken before this previous high gets taken out. That price target is basically 4,400, roughly 4,400 in here. So this is a key number up in here for bulls, and they need to get this for that continuation upside. Even if there's a pullback, that's what they need. They have to have this. If the bulls don't get that, right, they start to fail to get this, they start to do this breakdown bullshit, it's right back to business over here, okay, to downside moves. And I'm going to show you this in another way right now with triggers. So if we go back to this trigger screen right here, we go to a 30-minute chart. Go back to a 30-minute chart right here on SPOOs, right? You remember we talked about staying on trend. This is that previous high back here. Right, you can see it right there, right? My cursor is right there. Follow that gray line all the way back. You want to see that, right? And you want to see something else here, that we stay on trend until it happens, right? You don't want to see any pullbacks, even if it's violent, get sold. Makes sense? So this weekly trigger, this daily trigger, any of these pullbacks you want to see stay up there to take this bad boy out. So it's going to be important for you as a bull, some important things here. One, get rid of this here so it's not in the way. One, you want to take out this previous high back here. You know that. And number two, you want to stay on trend over here. Currently, that's at 426. Okay, and if we take this out right now, you're going to expect all this to go and continue to trade to the upside. So crucial here, right? Crucial here. There's something else I want to show you here too. Let's talk about this one right here. I want you to think about this right here too. I want you to watch this here. This is that 460, right? You got known sellers here. You got known sellers here. You got known sellers here. You got real weakness down here by bulls, right? And slam, capitulation trade. And now we're coming back up to where known sellers are again. So it's important here that you get that, right? And that you're able to hold this and consolidate and get some momentum underneath so that we can push higher here and take out this declining velocity here. These previous highs. So kind of a critical moment here. A lot of mechanics going on to try to push up and beat these sellers here. Bears are still in control here, whether you know that or not. They're still in control of this market, and you can see it right here. It's fairly simple to see, right? They could sold here, sold here, sold here, sold on weakness. And right now, all they have to do is step back in, right? And then they need to break underneath. You need to break underneath that daily and weekly trigger, and they're back in business again. Does that make sense? We talked about that last week. And so they still are in charge here. This is still their game, and they can step in right here. And I assure you, they're going to step back in. I assure you that when we come up here, right, they're going to step right in and try to slam this down, and at a minimum, do a hit and run, right? At a minimum, they're going to get that hit and run in here, take this out. So between now, today, Monday, right, you're going to be looking for some kind of weakness to sell into, or not quite weakness, but a back check on the daily, the weekly trigger, the hourly trigger. Be aware of this, okay? This is likely to happen. There is likely to see some pressure selling coming in, and we're going to find out if the bulls are real in here or not. Okay, so pay close attention to this into Friday, Monday, that kind of stuff. Now, intraday for today, go to a 30-minute chart here, or 1-minute chart. We're looking pretty bullish in here for the rest of today. And here's that red bar up here. We'll bring this over. We're fairly close here, right? So we can go back to that 30-minute and see if we can make sure that's it. Yeah, it's right there. Go a little bit higher with this. And we'll just snap a line there too so you have it right there. Okay? And we'll snap a line there for you. So just for today, okay? Get this previous, this is for me to trade. Hold on. Just using that to trade here. So that this white line right here, right, is kind of Valhalla for bulls. They need that. Technically, from a technical perspective, they need to tag above this, okay? 438.62. Let me post that on Twitter really quick. Hold on here. Yeah, 438.62. Uh-oh, did something happen? Let me see if that actually worked or not. Turn that off. So it's kind of what you're looking for here, right? Does it have to happen? No. Does it have to happen on SPY? No. SPX would be nice. ES, SPX, either of those, I'd be very happy. So if we tag above this line on SPX, if you're a bull at least, right, that's what you're looking for. If you're a seller, you don't want to see that, right? Sellers do not want to see above this white line right here. They want to hold this white line They want to roll this down before you ever get there and start the roll down. If you're a bear out there, trying to time tops and stuff like that, can you time this right now? No. There's nothing here saying begin to short. So if you're looking for that failure to short, you know what you're looking for, right? You're looking for the break of the 5-minute trigger. And we haven't broken it yet. So you can see it right here. We haven't broken this 5-minute trigger. And so that's 435.03. You want to see the break of that, 435.03. Now, there's one other hitch here for sellers, and that's going to be what I spoke to you about earlier, which is on Twitter. I spoke to you about this. It's roughly 4,300. Just call it 4,300. If we stay above that 4,300, right down here. So there's one other catch or caveat here. We can fail this right now, but as long as we stay above that 430, the bulls are still alive to tag that to the upside. So if you're a seller, right, you want to see that. You don't want to see this get tagged here. And you really want to see a break below this 430, okay, for like full bear town. Otherwise, if you see a pullback, yeah, you can do a hit and run, but expect bulls to try to take that out. But don't get your like crazy town bear on unless we break below that 430, okay? So if you want to get like crazy town bulls are done for, all that kind of shit, it's below this 430 currently. Important to understand here, okay? If you're a buyer or a seller or you're looking to find out what to expect next week or anything like that. So we'll talk about what to expect next week or what my expectations are, that kind of stuff here in just a moment. Now, hang tight here. Let's go back to a Weeble chart here. Let's do a SPY. So let's just look in here right now, okay? This is that PT2. Remember the PT2? We showed you that from yesterday, right here. You want to take out this stuff over here, right? That's your PT2 up there. And what don't bulls want to give up? So what would a bull be looking for into next week? It's a 30-minute chart right here. Let's see if we can go back to a 5-minute chart here. And what does let me see if we can go to a 15-minute. Maybe that can show it better. So I want you to see this. You can see those inverse head and shoulders and that kind of stuff right here. You got the low. You get the squeeze up, and you're looking for some kind of a hold down here. 423, 424 into next week. Okay. So any kind of pullback to be met with buyers stepping in right down in here. Okay. So for next week, that's S3 down here. That's 423. Excuse me. And the daily trigger is down at 426.30. So we're going to look at that real quick for next week. So into a 5-minute chart here. Here's your S3. You can see all these gaps down here that need to be picked up, right? Here's the daily trigger for next week, right? And we got Monday, Tuesday, Wednesday, Thursday, and Friday right here for next week. Well, let's make that yellow, and we'll make it large, make it nice and fat for next Friday, right? So this is what to expect into next week. Here's your daily trigger, right? If you're a bull, you're going to be looking to buy this into Tuesday, okay? Turn around Tuesday. We always talk about that. You might get that capitulation move down, right? You get that quick dip down, then it comes back up, and then we're off and running, right? And we're heading higher here. So today's Friday, right? Today's Friday, and you're going to look for some kind of a roll or squeeze up and roll into next week down here. And the most you should expect as a bull is, let's call it 423.43. You have about 15% Well, let's call it 30%. 30% chance of going retracing all this back down to like 423. You got about a 50% chance of coming back down here to the daily trigger at 430. And then another 15% chance we just we blast up here, roll down, and we're just continuing to the upside. That's about a 15% chance right there. And I don't know, we'll leave another 5% for I don't know, fucking moonshot to 460 or market crash down to I don't know, fucking below 4,000 or something like that. But into next week, right? Start to think about some kind of a put spread, right? Like a put spread. Doesn't have to be like a max short or a max this or a max that. If you had a put spread for, let's say, Wednesday or Friday, something in the money, right? ITM. And it squeezes up on you and you're panicking. And it still comes back down and takes out. You get your money and you're happy to go. We'll look at what this costs right now and see. We'll look at what this costs and see what it'll pay. Right now it's $4.35, right? So let me see here. Let's see what that costs and see what it pays. And where current price is. So we're at $4.35, and all I'd be looking for here would be $4.30 to $4.35. So remember, you just take be patient if you're a bear. If you're a seller, right? And then we got what do we got here? What do we got here? Wednesday, Monday, Tuesday. Let's do Wednesday the 8th. You could even do Friday if you wanted to. And debit put spread. We'll make it simple. We'll edit it 5:30, 4:30, and 4:35. You don't make a ton. For $366, you make $134. But, it's not bad, right? It's not a bad little. This basically means right here that, so if you had a Wednesday expiry, 4:35, 4:30, that would account for anything like that. And the only expectation for you would be that by Wednesday, you nail this at least right here. That's all you have to nail there. You nail this right here, you're good. If you nail this right here, you're good. If you nail this right here, you're good. If you come up here and Tuesday we blast down into Wednesday, you're good. Not a bad trade. It's not like, hey, I scored a 300% rocket ship or anything like that, but it's kind of reasonable. It's got a 61% probability of happening. You're not expecting blood and all that, but if you get down here and I don't know, like we get down here and you print that, and then we start to reject underneath, you then get more aggressive with it, right? Start taking shorts out, you start just buying fucking puts. If you're expecting for that big reversal that you were looking for, you have some exposure here, and you have some exposure to that downside move. It's not crazy. You're not going to get blown out or anything like that. Seems pretty reasonable to me to take that trade. So if you are bearish, there's your trade. If you're bullish and you're like, well, Cap, we're way up here, we're so close up here, you just sit back and sit on your hands for next week until you catch that dip buy, okay? For putting any major money in the market, whether it's down here. You just wait down there to grab it so you can get a nice fat dip buy for next week. Does that make sense to you guys out there? It's fairly simple, fairly simple math here, right? And you can see it right here too. Fairly easy trade, and you don't really have to sweat too much. Another part of that trade too is another good part about that trade is that if we continue to drive higher, you can trade zero dates and still be in those put spreads. You can be in those put spreads, and you can trade the market up, right? You can buy yourself some zero-day calls, and if it continues to go higher, it's going to pay you even more. So if we begin to squeeze up to that 440, you've got exposure to the downside for the pullback into next week. You're making the 0-day calls into the close. It's a no-brainer here. Definitely a no-brainer for a bear or even a buyer to just put that protection on into early next week. I guess you could do Friday if you wanted to, if you wanted some extra time on it or something like that. But Wednesday seems long enough for that pullback to happen. Maybe it's in the Wednesday close or something like that. If we grind up into let's say we grind up into Wednesday instead to 440, and your put spread burns, right? You're like, fuck, I'm losing this or something like that. You can always cut the one side of that trade, buy 0 dates to trade up into Wednesday as well to cover the trade. So that you have like tactful ways to manage that trade, even if it starts to go against you. Let me see. We'll check you guys out. How's everybody doing out there? I'm feeling better today. Like right now, I was feeling like shit this morning. Right now, at this moment, I feel good. So I feel real good at this exact moment. So we got a bunch of stuff to go over. We got to go over some S or some gamma stuff. We have to go over some collar stuff. And I want you to realize that they're going to. I want you guys to be able to comprehend or understand that dips should be bought. Market should be supportive. And it's every time you see buyers step in, you should see the dealers chase that buying. So expect more of a grind up than squeezing at this point. Key point here, right? No more squeezing. More expect dips to be bought and then moves to be made higher. So if you're a bull, you need to be conscious of where those dip buys are. So if you see demand step in, you should see dealers follow along with that dip buying. As long as we stay above that 4,300, that should persist. Okay, so hear all those things, or hear that specific statements I just made to you. You should see stability, and you should see known demand get bought, and you should see dealers follow right along with that action. So we're going to go over a few things here. Just give me a couple seconds here. You got a downside price target here. If you can get a rejection, only if you can get a rejection. Don't say I said this stupid shit or anything like that. If you get that rejection right there, your downside target will be 431.85. So right in there, you're looking for the rejection. See this one right here? You want to see that rejection right there. You have a downside target. You got to see the rejection, okay? Hold on a second here. I said I'm doing well, and I'm like, maybe I'm not doing so well. So expectations in the next week. If you are a bull, you're paying attention to two things, right? If you're a bear, you're paying attention to two things as well, right? Failure to make a new high, ability to make a new high, right? Well, is there like something that you want to be eyes on? If you're a bear, you want to be watching that, right? If you're a bull, you want to be watching that. So number one, right? Failure to make a new high or ability to make a new high. Number two, I said two, but it's three. Number two is going to be breaking trend. That's a big one, right? We break trend, and that begins to stop the question of are we going to make a new high or fail to make a new high. So number two is, do we break trend to the downside? And that's not underneath 430. That's just breaking trend. Trend for you, if you're a bull, is going to be the hourly trigger, and possibly the daily trigger, but mostly the hourly trigger. If trend is not broken and the previous high is made and you're a bull, you're going to be looking for supportive action and buying the dip at known demand levels. If you're a bear, a seller, and you see that we failed to make that previous new high, you're going to be looking to sell the fuck out of that, right? Sell the fuck out of that hourly trigger, sell the fuck out of that daily trigger, get underneath it and reverse this shit to the downside and shit and rain all over a holiday rally. I think we've already had 2 holiday rallies, by the way. For this quarter, we've had 2 in my view. I've been paid very well for 2 rallies this quarter. This quarter has actually been very good for bulls. It sounds crazy to you, but it is. and we're likely not done for the quarter. So, anyways, those are the things that you need to be watching out for this upcoming week. Those are like the 2 or 3 key things that you're searching for. Don't be listening to I don't care if you're a bear or a bull. Don't be listening to sellers out there telling you why aren't we clearing out those previous fucking pivots, those gaps down below. They know why they want to clear those things now. Like the sooner they clear those gaps down below, and then we don't make that previous high, they know that the market's going to reverse to the ugly downside. They also know, like longtime market participants also know that if you do get the new high and pull back to close out those pivots down below, they know they're going to get bought, and they don't want to see those things get bought. They want to see those things fail, right? They want to see us go down and close those gaps, and they want you to think that you're going to buy that dip, and you're not going to notice that we didn't get that previous high, and so they're gonna fucking set your ass, right? Trap you and send it even lower and lower and lower, and it's going to be a fucking nasty bloodbath. Remember what I just said to you as a bear, right? I said, don't be shorting this until you see the rejection off that 1 minute trigger right here, right? And you want to watch this action right here and see what this action shows you, because I'll tell you what, this thing regains right here, right? Because you have supportive flows. We go back up right here, you're going to get squeezed again. You're looking for a rejection right here, and you're seeing the pain trade right now for bears. I'm going to show you this right here. This is a pain trade right now. You're going to start seeing bears get squeezed out. They're going to be like, oh, no, I'm upset, and blah, 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 blah. What you'll see happen right here in this pain trade is you're going to see the squeeze up. Bulls want to see a new high right here, right? If you're a bear, by the way, you might be given an opportunity to get out somewhere in here. When you get squeezed out up here, you might be given the chance to at least get out at some point. Here goes your pain right there, brothers and sisters. There goes the pain. Remember, some of you are all out there probably already fucking short, right? Fucking just max short right now. You want to see the rejection here. You need to see the rejection. You want to see the roll and then jump on that. Through 4,300, 415s. Yeah, you can do it now. You can do it at the end of the day. If you're in put spreads, you don't really care about this price action. If you're in put spreads, you just close your fucking laptop and don't come back and look at it until Wednesday. You could trade some 0-to-8 calls and shit like that, like today into Monday or something like that if you wanted to offset it, but you don't do anything. You just fucking place your fucking bet and walk away. I guess you could get max money if you wanted to wait until we hit that red bar up here. If you want to like one of those fucking like to the tick callers, and you're like, yeah, I'm going to wait until we get up here, and then we put that put spread on, take it down into next Wednesday. I'm a cool guy. You can do that too. Another option for you over there. So that's the expectations in the next week. Not too much there to say. I don't really have too much more other than that to say to you. If you're thinking, if you want to know from me, do I think we crash or continue to the downside, or if bulls have this, if we're like having a bullish reversal in the marketplace, bears still control this market. That's all I can tell you. Well, the only thing I can tell you is that bears still control this market. Sellers still control this market. They're definitely right here, and they're definitely going to try to rain on your parade, your holiday parade, your no matter what they tell you in the fucking news, all that kind of stuff. Just know that sellers are up here, and they want to rain on your parade without a doubt. And they still control. They still control the downside moves in the market. Now, how do you know if they no longer control the market? It's when you beat this right here. If you can beat this right here, and then successfully backtest it, and you're a bull, I'll switch my thesis back to bulls. Bulls will then be in control of the market. It's definitely not what a bear wants to see. right? And if you see that, if you're a bear, if you're a seller out there, if you see that new high, right? You see this new high up here, and you see that back test get bought. Don't be getting all bearish on me. Just turn bull and be tactful again, selling and all that kind of stuff. We're gonna switch back to. We're not switch back because the one thing I'll say here is sellers can easily reverse this and things can get fucking ugly. Now, I'm going to warn you of that too. I got to put that warning out there again. Let me see if we can go to a 30-minute chart here. So I do want to warn you if you're a bull. 30-minute chart for bulls right here, right? I'm going to fucking warn you, bulls, man. I'm going to warn you right here because, you're like, yeah, well, everything's awesome, right? Bam, downside, right? Everything's awesome or above, right? Bam, downside. Ooh, hold on here. Dude, what the fuck is with? So, we're all hunky-dory. Everything is awesome sauce. And you get rolled down here and you break underneath. And where are we back to again? We're back to fucking more downside to come, right? Now, VRL and Elliott waiver, you're going to be like, there's 1, there's 2, there's 3. 1, 2, 3. Correction over. But I'll tell you what, even though you think that this can continue, I can assure you that this can continue. And the scary part is that daily and weekly trigger crossover here, if that gets confirmed in here, this usually leads to a crash. I'm going to warn you of that. So, and we've had crashes, right? So just be aware of it. Just be aware that this is still in play. That cross is still in play. We have no cross on the daily trigger above the weekly trigger yet. We can next week, but we don't have it yet. So we're still in that. We're still in that. Don't count your chickens before they hatch phase in the market. And be open to that because you don't want to be caught flat-footed, left-footed, right-footed, whatever it is you are, and be like, hey, Cap, you didn't tell me that there's still risk to the downside, market's crashing, what's going on, that kind of stuff. So just be aware of that here's that PT2 right here so you can see it. I'll make it yellow. That's what the bulls want up here into this close. Let's just be aware of it, be conscious of it, and don't be on public being like it's a new bull run, it's a new day for the bulls, any of that kind of stuff. It's just it's not real. It's not verified yet. So you really don't have a ton to stand on. You really don't have a ton to stand on in terms of it's like you just don't be counting your chickens before it happens. Kind of like the 1987 crash crowd. Oh, don't count your chickens before they hatch, right? Get that confirmation, get the fucking downside move, get the fucking confirmation on the daily trigger crossing down the weekly trigger, and then we'll discuss the 1987 crash. Because if we did reject this, if we reject up here, and if we do reject this and we begin to get underneath, right, and we confirm that cross right there, then they have an actual argument. You're a bear, you actually have an argument. This is real danger right there. That's like danger zone. Danger. That is some dangerous shit right there. So if you see something like that, super hella dangerous. We have no new high. We have no bounce confirmation for a reversal trend change. That's where that'll take place. Until that happens, until you see that right there, you got nothing as a bull. Or you got nothing that you can. You got nothing where you're like, I don't believe you if you're a bull until that happens. No. You could actually see. You would actually see me in a bear suit. You would actually see me in a true bear suit if we began to break underneath this and started coming down. This would be super bear right here. As a matter of fact, breaking this previous low would be a full bear suit. It'd be all over for the market at that point. You'd see some really nasty selling. Super nasty selling. It'd get fucking violent. Well, you'd still have to do this one down here, but still, you get what I'm saying. You can come down here, but Like rejection stuff, all that stuff. It's all saying be a super fucking bear. So, and that's when you get truly bearish. That's when you're like, cut the fucking parachute and run. Budweiser's doing pretty well right now, huh? A lot of my tickers, I've been selling out of them. A lot of my shit that I wanted to hold for like 5 years, and shit's all cranking right now. So I'm almost flat in this market, anyways. I'm almost like completely fucking out of this market. Waiting for late winter and April. So like February, April, and we have to have a talk about that. Coming up here soon. We got to talk. I wanted to talk about Jerome Powell today, but I don't think I'm going to. I got to wrap it up into. I have to wrap it up into. I have to roll it and wrap it up into a few things. We have to talk about downside expectations into 2024, what the Fed thinks it's going to do, prevailing thoughts on higher for longer. You saw the jobs stuff. I talked to you guys. I railed on you guys on jobs, didn't I? Last 2 weeks, right? Talked to you guys about unemployment. Talked to you guys about jobs. Talked to you guys about wage inflation. Talked to you about inflation, the stickiness of it, what the Fed looks like to me they're trying to do, which is fucking wild. And it's going to take more than just a day or two for me to wrap all that up for you for an expectation for next year. I'm really wonkied out by all of this. The scam looks like it's on. So it sucks to say that, but it does look like it's still on. I really wanted to see 25 BPS. I'll be honest with you. I wanted to see it. And I don't know. I'm not believing the Fed still to this point in a lot of this stuff. Like you need to murder the wage thing, and you're not. The Fed is going to fail in the wage thing. I just read an article 2 days ago from McDonald's, or all fast food restaurants are raising their minimum wage to $20 an hour. If you want, I can try to pull it up or something. I'm going to try to have it for you next week, but you start paying people. It's not that you shouldn't or can't. I get that you need to, but you're not going to argue with me that if you're going to start having minimum wages of $20, that you're not going to drag all other wages up over the next 4 or 5 years. UAW is starting to sign contracts with people right now across the country. It's the same kind of stuff. And there are a bunch of I've already posted all these other fucking companies, or all these other unions and companies and industries that are raising their pay, and you're going to see everybody else get pulled, dragging in that direction. It's kind of like that screaming asshole, not an asshole, but like some whiny bitch in the background. I shouldn't say some whiny asshole in the background that's whining, and you're just going to drag them ahead in wages. And you know what that shit leads to, right? It leads to a higher price stock market. You start raising. You guys haven't made a bunch of posts a week or two ago about sticky inflation and wage price spiral, and not that we're going to be children of the yen. I think I posted that documentary, but you should watch that documentary. I posted it a week or two ago. You should watch that documentary because it shows where we are headed, even if it's being retarded slightly. And the Fed retarding of that happening is not what we need, and it's not the plan that he has either. And some of this stuff is going to become embedded because of how we're treating inflation and wages, and companies, and probably very smart people saying nope, we're going up in price or in wages, and nope, we don't want to drop the price of eggs. We like the price of eggs high here, and you know what? Fuck the system. It's like greed on a whole nother level. If you're like Bob on Main Street, or you're retired, or even if you're young, I want you to know that there are extremely greedy people out there that don't care if they've raised the prices of eggs. They don't want to hear it, and they'll just fight you on your wages as long as possible until you have to raise them so they can max profits, knowing that all this stuff is going up. So yeah, you're gonna see rents at one bedroom apartment, right? $2, $3, $4,000 in 20 years, $5,000, $4,000. I know you don't believe that, but you're going to see it, and you can see it right now. You can kind of see the cracks in the Fed. You can kind of see the cracks in wages. You can see the cracks in pricing not coming down. You can see it in the inflation that is sticky right now. Do you notice that you're not getting anything extra for that stuff? And you might even be getting less. So you're getting higher prices, right? And then you're getting nothing extra for it, right? You're not getting anything extra with those higher prices. And that's like this evil, insidious, not evil, insidious, but greed, right? I don't know if greed's good or bad, but it's greed in the background that's working against you. And it's also wanton, I don't give a fuck about you on Main Street. If I'm going to raise prices on you and give you less service or less quality and that kind of stuff. And I'm aware, in being that greedy person or that greedy entity, that I'll have to raise your wages at some point, and I'll fight you all along the way, although wherever I have to pay them, I will. So if you're seeing that, at least, right, be aware of it. Like even last week, I was talking to you guys about getting hit with a service charge, right? 20% service charge regardless. And those people, you could see those service people were like, we don't give a fuck. I'm getting my 20%. And I understand that. I get it. And these restaurants don't care either, right? Even the people producing the food don't care at that point. Everybody's getting paid. Nobody cares. So anyways, we got a lot to talk about. We have a lot to discuss about that stuff in the coming days next week, because it impacts next year. And how big is that role when it comes the anticipation of cutting rates? Are they actually going to cut rates? Maybe Jerome's plan is to hold rates up higher for years and years and years. I don't see that happening. I'm not a believer in that it's going to happen. How much that front running is, what's the previous low that we're going to go test, all that kind of stuff, and how ugly is it going to get? Because it's going to get ugly. At some point, we're going to get that recheck, that back check, and check that 350, or check the previous high if we go higher from the high of 2022. So we have a lot to look at into next year. The baseline here, the only thing I could say baseline would be, if you're trying to get long in this market permanently, you're probably waiting for February or April at some point to jump in on that trade. Look for, if this is a 10-year yield chart, or something like that, for more downside to come. And yields to go down to 4.2%, right down there. Keep your eye on yields right here for another downside move. Set an alert at home at 4.73%. That's got kind of a confirmation there, but you could set it lower. You could set it at 4.6 if you really wanted to. I'd set an alert at 4.6% and 4.73. See if it just gives, because it is rejecting off this half an hour. You see it right there? See it right there? So set an alert at 4.6%. Target of 4.2% on US 10-year. I literally just need to stay parked right here. Just need to stay above this right here. All we need to do is stay above that right there. We're good to go. That's it. Should get a nice fat dip by Monday. Sorry, I'm checking this. Checking to make sure that all this needs to do is stay down here. Just can't have any of that down there. Can't have any rejection down there. Damn, just grinding right now. No new high here. Failure to get a new high right here. Not bullish, just neutral here. Not bearish or anything, just neutral. Gamma flip, all you need to know is that you're positive above and negative below. The simplest way. So dealers will tend to, if we're in positive gamma, you'd expect dips to be bought. You'd expect low volatility. That means we grind up slowly to the upside. Below the gamma flip, when we're into negative gamma, what you really need to know is expect volatility, expect large downside moves, expect any rip to be sold, expect any dip not to be held, and we're in a negative regime here, and we're targeting. We've got magnets below that of lower puts to tag. When we're in positive gamma and you've got a large concentration of calls to the upside, you're looking to tag those calls, but it should grind slowly up and tag those calls. That's like the big thing for you to take away, or the simplified thing for you to take away. If you got a bunch of puts on the downside below the gamma flip to the downside, they're gonna seek out to get close, maybe not tag, but get close to those large gamma nodes, and you inverse everything from a bull perspective. God damn, I'm fucking feeling sick again right now. My stomach's hurting me again. Oh, and I wanted to bring up Apple again. Remember we talked about Apple before the report, and I said whatever direction the market is heading in, Apple should trade that after their ER, right? I went back and showed you 6 or 7 Apple ERs, and I said, hey, unless they come out with something really nasty or something really crazy that you haven't heard, right? Crazy news, expect Apple to trade with the market, and it should trade with the market. So just a heads up with that. So Apple should follow the market in the coming weeks. We really need futures to put us up there because cash market can't get it done. Cash market can't get this done. They need futures to put it up there. I don't want to see this. I don't want to see this get lost here. No, I sold. So the second MBI trade that I've had this quarter, sold out of those at this point. I'm just looking for a dip buy next week. If I can get a dip buy on Wednesday or something like that, I'm going to grab another rack for the 31st again and run them back up again. It'll be the third time that I've run that trade. So I'm looking for that trade on Wednesday of next week at some point. Tuesday, Wednesday, something like that. Put that trade on. I'm gonna guess. I'm gonna guess you're gonna see a bunch of meme stuff next week.
Inflation expectations creep up. We've got to act.
Let's see what we do here in the close. You got dealers are all squirrely. They want to park this bus into 435 into the close. You got me saying I'd like to see this squeeze up.
That if inflation continues,
you might not see this until Monday or 6 p.m. or some stupid nonsense like that, so they don't have to print it. They're going to try to park this bus into the close if they can. Bears want to see none of this today, after hours, Monday. They don't want to see any of that action up there into this close or Monday. They want to seal the deal to the downside. Hey, thanks. I appreciate it. Bill Boy, thank you very much, man. Ugh. Yeah, I'm not. This isn't a squeeze that I'm looking for. I'm looking for algorithms to send us there.
Wage increases
this is more of a function of algorithms getting up there.
Wages pressures developing in a good direction, Fedbostic says.
Rohit, I did a whole. I fucking charted the whole entire thing out over there. You got to go back and look at it on the tape, man. Go back and look at it on the tape. I did the whole charted the whole entire thing out, so you can look at it. I got one of them is pretty bullish, and the other one is
Bostic says I expect to see
bearish.
Inflation cooling into next year. Also clarifies that I think we're in restrictive territory today.
Thanks, I appreciate it. 342. What do you guys got planned for the weekend? You guys got plans? Are you guys taking it easy after the Halloween weekend? I know we got torn out. We were going places. We started going places Friday, Saturday, and then Sunday we wrapped it up and we were like, oh, we'll go back and do some trick or treating on Monday and Tuesday for Halloween, and we got slammed with COVID. You guys have plans for the weekend or no? Hey Ben, what's going on?
Feds Bostic says a policy shift would be warranted before
You got a new
inflation's at
Foster
2%,
puppy
saying
arriving
that's
tomorrow.
Feds
That's
Bostic
rad.
saying a policy shift would be warranted.
Detox some
before
sugar. We
inflation is at
skipped out on
2%.
candy this year. We got some candy with the kids, but not the haul that we would
Again,
normally
Feds
get.
Bostic, they're saying as 2% inflation gets closer, the
You're
Fed
gonna go
will
lay in
have
a
to
hammock in
weigh
the forest.
interest
That's
rate
nice.
levels.
I have a question for you with hammock camping. Do you get an overwhelming sense of dread sleeping in a hammock? That's what happens to me. I get scared that an animal's gonna bite me from the bottom. I feel exposed. I don't know why. It's like a mental thing. 13 years old. Right on, right on. Happy congratulations. Happy birthday. Happy teenage years. It's official. Teenage years. Kids like being acknowledged for that too, right? When they like hit 13 specifically, you're now officially a teenager. You're no longer a preteen. And they freak out. What's going on, Ben? I love you, brother. Good to see you, my man. Ben Godfrey, it's a shout out to you. Back from Vegas for Halloween, chilling. Seems like everybody's going to chill this weekend, right? Back up there, make it nice and tight there. Dealers want to park 435 flat. Like they want to park 435.00 here. 435.00 into the close if they can. Kill the options market. 415 hits, then boom, send it up. Yeah, you do like sleeping in the hammock? How about winter camping for you? I know that's the only other thing. I've got two issues with hammock camping. One is I get freaked out, and then the second one is in the winter it sucks. I get too cold in the winter hammock camping.
Is now over. So we're looking again now to the early market on close.
Swaddled.
Still add 6 million to the buy side.
So nice. It's been a really good week. I've made really good money. This whole week's been fucking outstanding. I've made great money this week. My quarter is looking really good right now. It's fucking phenomenal. So we can keep this up and like wrap up the bow and the presents for
and did also confirm
Festivus
and his opinion
for the rest of us and
would be warranted
take care at the end of the year, and I'd be a happy man.
So again, just hearing some comments from Feds Bostic on this Bloomberg TV interview.
Yeah, this whole week's been good. So
speaking.
So this actually not just the week, but the quarter has been good. Like it's weird. The quarter's been really good to me. My quarter is outstanding right now, so I'm very happy. This quarter specifically, I didn't know if it would be good or not. So I'm very happy so far. Cross my fucking fingers here. Yeah, you're a swinging meat bag for the Bears. I think that's the brain does that too. Like my 3 fucking cents. Fuck you. I fucking hate these fucking dealers. I'm going to fucking diamond hand this shit right into the goddamn bell. I already know how this is going to go. Fucking furious right now. Watching those 435s are going to be like 20 cents just to pay off a fucking spread. Fucking cunts. Sorry. Oops. These, hammock camping. That's my feeling. I feel like an animal's gonna come up and bite my fucking half my side off. I don't know why tent camping to me, I am a tent camper, but I'm not a hammock camper anymore. I've tried it out. But I don't know why. It's like a mental thing. And the only other time when I really like camping on the ground is winter camping. With good insulation layers and shit. Two insulation layers. But most of my friends are diehard hammock campers. Don't drive angry. I don't drive angry. I'm actually a happy driver. The only time I drive angry is when do I drive angry? Not really ever. The thing that annoys me, if I drive, I'll tell you what annoys me when I drive. The big one is when I'm on a highway and I get paced. Like if you're pacing me, that pisses me off. It's like get in line, fucking in front of me or behind me. Set your speed and let's go together. Pacing pisses me off. What else do I hate? Driving. I hate people that pass me on lower than 55 roads and then slow right down. Or like I got to get in front of you just to make a right or something like that. I'm like, seriously? Where the fuck are you going? But I don't really get angry driving. I got kids and stuff, so it's like I've like fallen into the not a trap, but I've been trained now for so many years to just be talking to the kids. And I've got the oldest daughter's doing the driving school and all that kind of stuff. So try to be looking really good for the kids. You'll be spreading rumors this weekend of a market crash to help my Wednesday IWM swing puts out. We should look at IWM because of the reports next week. Let me take a look at IWM real quick. I should have looked at it today and I didn't. Oh. No, IWM. 30-minute chart on IWM. Whoop. I don't know if it'd be, well, I guess you can swing puts on IWM. I'd be closing them out though. $1, $170, and then trading that 180 up there. IWM's pretty bullish right now, so look for that pullback in IWM into early next week, but then look for a huge rip on IWM. If you want to get bearish on IWM, it's below 170 for IWM. I like trading IWM. You know what I like trading IWM is summertime. Summertime is my favorite time to trade IWM. Abso-fucking-lutely. Place to trade, come back in a day. Yeah, this is bleeding pretty fucking bad here.
So we're looking now to the markets on close.
Now just underneath 435 right now, trading 434.
Markets on close imbalance for the
now 435 as they try to park it into the close. Not much going on here in the close today and Friday. Definitely not bearish. 170Ps for Wednesday. Definitely not bearish. Just don't think we get another gap up on Monday. Got to fill one of those. At least no LOL. Yeah, I think IWM goes down on Monday, but I think it catches the bounce on 170 though. I wouldn't be short. Like get to 170 and just get out of that put spread or whatever you're in. If you see rejection below 170, you can get bearish again. So I already went through this morning. You should see today or after the close or into Monday. You should see that tag, this one right here. See that price target right there. If you don't see this, if you see a failure of this target getting tagged, it's kind of bearish. It lends itself to some pretty bearish moves. So, and no, I'm not talking about 423. I'm talking about some really bearish shit. So, you're looking for the algorithms to put us up here. There's some call, or there's a reason for us not to go there right now, which is just calls. Got too many fucking calls in the market. So maybe they do it in the after hours. They don't pay the calls. Then we get up there and tag it. If we're going to get bullish. If we're not going to get bullish, roll it down. If you don't understand what I'm talking about, you need to go back to the beginning of the broadcast. And I reviewed all of this at the beginning of the broadcast. So you could actually spend this weekend reviewing this broadcast today from the beginning. And it'll give you an idea of what to expect into next week. Downside move expected into next week. If we do this, then that. If we don't do this, then that. That kind of stuff. Review it, because today's broadcast is omnipresent for what happens next week. I spent about an hour, I think, hour and a half going over it, what to expect next week. Why, and what to expect if this happens, what to expect if that happens. Okay, Sorry, I'm here. I'm back on YouTube. What's going on? She Kim a princess. What's going on? Sorry, I'm here. I'm reading. What did I miss? I apologize. I'm reading YouTube comments right now. What do I need to do? Just tell me in YouTube what to do. Tell me on YouTube what do you got going on. Cap, I said, mentioned something about some days being reversal days. Is that common knowledge? Yes, common knowledge. Go back to the beginning of this break. There's a whole bunch of you asking some questions, and I'm like, yeah, you should have watched the beginning of the break. I can tell you weren't here. So what do you guys ask? Matt, you going to do XBI? Hold on here, buddy. Kim, what am I missing? Thanks, Kim. XBI, 30-minute chart. What's going on with XBI? Expect pullback. Short XBI down to $69, and it's going to go up again. XBI, 30-minute chart. Pullback. Buy 69. Target 72.29, baby. And I want to say something about it. Let's look at XBI really quick before the end of the day here. Trigger screen. This is a prime setup here. I want you guys to see this, okay? I want you to look. It's very important, okay? This is a prime setup here. We are overbought, maxed out on the hourly. Intraday trend, right? Maxed out. We should pull back. Daily, though, is looking great in XBI. So it's coming under the zero line. So what you're looking for is for that dip buy to come into trade here, right? On the daily trigger. And for it to be supportive due to it coming up from negativity, right? Still hasn't gotten positive yet. So you're going to expect this dip to get bought and the trade to go up to 72.29. So XBI, a little bit of weakness here and looking for another dip to buy into next week to trade 77.29. So XBI looking good. If that daily trigger breaks, look out below for XBI. Dude, they're going to one fucking penny right now. One goddamn penny. Bleeding us off into the bell here on Spoos. Looks like I'm taking an L here and some zero dates. Not a big deal for me. I'm not like complaining about it. It's more of like a lotto ticket. Trying to see if I can follow these algorithms up and try to grab this. If I can't grab this right here, if they're not going to run this up after the bell here, it's not really worth it for me. I don't think it's worth it for me to trade that 438. What is it? 438.80? I don't know. Anyways. So I should feel better by next week. I'm hoping that I don't test positive for COVID by next Monday or Sunday. I'll be back on the horse again and riding this shit. But otherwise, I'll see you guys on Monday. There's a few of you out there that have been needing to speak to. There's a bunch of you that I need to be speaking to. Please just be patient with me. I'll be contacting you guys as soon as I possibly can. Otherwise, have a great weekend. Hope to see you guys on Monday. And hope I'm feeling better so we can get back into the reins again. Stay safe. Don't do anything crazy. Rest up. We got a bunch coming down the pike. And we got a bunch of stuff to go over for expectations for 2024. We're going to talk 2024 this week, I think, and start getting prepared for what to expect into late fall, late winter, and then early springtime, and all this shit that these Fed presidents are saying. Dude, that shit today, what I just heard in the background today.
That's what it's seeing for the week here. Officially, the S&P 500 jumping 5.85%.
Fucking Bostic, dude. They're trying to set up right now a scam
as well.
Mission accomplished.
7.56%.
That's what you're getting. Or that's what it looks like you're getting, or that's what they're telling us. I don't know if that's real or they changed their tune or something like that, but man, I'll fucking tell you what. It's looking like mission accomplished here. Dude, send my fucking calls up. I'm up at a penny at least on Monday. Okay, I'll see you guys.